Americans need $1.26 million to retire comfortably. Now, this number comes from the 2025 Northwestern Mutual Progress and Planning Study. Now, this study every single year interviews thousands of people and asks them, how much money do you need to retire comfortably? How much money do you need? And they break it down by generation and by age. And the number this year is $1.26 million. Now, if that number feels massive to you, it's probably because it is, because to be honest, I looked at the data and most people are nowhere near this number. So in this video, I want to break down how much people actually have saved for retirement at different ages, how much they think they need to retire, and let's discuss the gap. Because to be honest, people have nowhere near saved what they say they need to have saved. And let's talk about a plan of how to get from here, where you don't have enough saved at all, to a comfortable retirement. Because yes, even if you're way behind, it is possible. I want to break down how much people think they need to retire and then compare it to the real numbers of how much people actually have saved in their retirement savings accounts. And then I want to show you a plan on how to catch up if you're feeling behind. Even if you're in your 40s or 50s, it's not too late. So here's the study, the 2025 Planning and Progress study. Now, if you see here, they interviewed about 4,600 people and of various incomes and age brackets and all that stuff. And about 1,000 of those actually had $1 million net worth or higher. So there were some wealthier individuals in this study. But when asking what the magic number is for 2025, they said is 1.26 million. As you could see, that's a little bit up from back in 2021. It's about the same as 2022. What's curious here is it's actually down from last year by about $200,000. My opinion is because inflation was so hot between 2022 and 2023. People in 2024 are like, there's no way it's going down. Obviously, the Fed has raised interest rates, and the rates have dropped the inflation rate. So maybe that's why people don't think they need as much, or maybe the people that are participating in this are just a different set of people. But either way, 1.26 million is what people say they need. Here's the thing: if you go to the very next page of this study, it says 25% of the people that responded say they have less than a year worth of their income in retirement savings balances. So if you make 75K a year and you don't have 75,000 invested, you would be one of these people. But that doesn't give us the full picture. So what I decided to do is dive a little bit deeper. And there's a Federal Reserve study, the Survey of Consumer Finances, and Kiplinger did a nice little breakdown of what the actual retirement savings in America is right now. So again, the latest data we have is 2023. But if you look at the median and mean retirement savings by age, here's how it breaks down. And quick caveat, the mean, I don't like to look at that because it always is skewed by ultra high net worth individuals and it pushes the number way higher than it actually is. The median is right in the middle. Half the people in this survey of consumer finances have less than this number. Half the people have more. This is really the center line. That's the number we want to focus on here. So if you're 35 years old or under, you probably have less than $20,000 saved, or at least the median. From 35 to 44, the median retirement savings is only $45,000. And then once you're 45 to 54, you're getting closer to retirement. Only 115,000 is the median. And look at this, right up before retirement age, 55 to 64, the median savings is only $185,000. And once you're in retirement, 200,000 is the median. Now, that feels way off compared to the $1.26 million that people say they need to retire comfortably. So what gives? What is happening here? Why is there such a massive gap? Well, I believe there's a couple of things. Number one, people that are retired today, maybe on average, they don't have as much money in retirement savings, but maybe they need less. So maybe the house is paid off. Maybe they're already collecting Social Security, and they're just spending less money and they have less needs. And then the people that take the survey are thinking, maybe 15, 20, 30 years out, I'm going to need a whole lot more money. That would make a lot of sense because if inflation, the number you need for retirement doubles like every 20 to 25 years. So if you're thinking further out, you're going to need far more. I think the other key is people are honestly just living on less right now. I think that the expected amount people think they need for retirement and the amount they're actually able to accumulate, there's just a gap there in execution and actually saving that money. I think there's another piece at play here, and I'll have an entire another video on this, and maybe it's just my running theory. I think that especially people retired right now, they saw their parents have the company take care of them. They saw their parents live on a pension, and a pension combined with Social Security was enough to retire on. So they didn't actually have to save very much money at all. The problem is that there was a gap in generations, and once pensions started to go away, the 401k and the IRAs were introduced and pushed, there was not enough people that said this is a requirement. Companies didn't force you to invest in it. It was sort of at your discretion. And if I saw my parents not save for retirement, I'd be like, well, why would I need to? Right? They're fine. They got food on the table. The bills are paid. I don't really need to put much away. And by the time I realized I needed to start saving, it was a little bit too late. And so that's to me why I think there's a lack of retirement savings compared to what people think that they actually need. And that's where the gap is. Now, the other key piece is if you're looking at these numbers and thinking, wow, that's about what I have saved in retirement, or maybe I just have a little more or a little bit less, but I'm nowhere near on track to get to that 1.25 million or 1.5 million goal. Well, there's a couple of things you need to think about. Number one is, are you actually putting money into your 401k, your IRA? Are you prioritizing savings? Are you in a stage of life where just there's very high expenses and you can't save a ton, but you haven't even started at all? You haven't put a little bit away. Maybe you're getting raises and you're working your way up the corporate ladder, but you're not investing when you get more money. You're inflating your lifestyle instead. I see this all the time with my coaching clients where the income continues to go up, but they're not putting money into 401k. Maybe they're putting 5% away, but they could be putting 10% away, but they decided to upgrade their car, their house, their lifestyle instead of increasing their retirement contributions. So I think the gap is in place for a myriad of reasons, but if you're looking at these numbers feeling like there's no way I can get to this, and in fact, maybe I'm later in my life and I don't know if I can get to the $1.26 million retirement, fear not, there's a way to get there. So I want to show you how to close that gap of where you are today and where you want to be. All right, step number one is you just need to know your retirement number. Now, lucky for you, I have an entire video on that right here. I'll link it and you can click on that and check it out. It's the exact process I walk my money coaching clients through. But the idea is you break down what are you going to spend in retirement on a monthly basis. And then you go over and calculate how much do I need to retire, which is basically 25 times that annual spending amount or 300 times the monthly spending amount. So if you run through an example and you figure out I need about $60,000 in the future on a annual basis, you multiply that by 25, which means you need about 1.5 million, which is kind of close to the magic number. We talked about 1.25 million. So let's just use an example of you want to get to 1.5 million by retirement. Step two is you just need to max out your contributions. You're going to have to put as much money away in tax advantaged accounts as possible to get there. If you want to get to $1.5 million and you're only, let's say 50 years old and you've got 115,000, kind of like that median example, you got a long way to go. That's over $1 million. And you don't have a ton of time to get there. If you're 50 and you want to retire at 65, you got 15 years. The best way to do this is to max out your tax advantaged accounts. Number one is that 401k account. You can put $23,500 as an employee into a 401k account. The cool thing is that's also going to lower your taxable income. So you're going to have a massive tax savings at the same time you max this out. But if you're age 50 or older, you can put an extra $7,500 a year into this, which means you can actually put away $31,000 into your 401k. If you have a spouse and they have access to a 401k, you guys could together put away $62,000 in tax deductible savings right into your 401k account. That's massive. Now, if you combine the 401k, $62,000, with opening IRAs and putting an additional $8,000 a piece, $7,000 plus $1,000 catch-up contribution because you're age 50 or older, that's another $16,000. So you technically have access to almost $80,000 in tax-advantaged accounts just between those two if you're married. If you're not married, that's still going to be nearly $40,000 you can put away. Now, if you're putting money into an IRA and maybe you have too high of an income and you don't qualify for it, you could always do the backdoor Roth IRA, which means you put money into a traditional IRA, don't deduct it, and then just roll it over to a Roth IRA. I'll have an entire video on that later. I'll link it below. But the backdoor Roth IRA is for high income earners. So if you just max out those two accounts, you can put a ton of money away and save on taxes at the same time. Now, step three is you need to start investing for growth. Now, your current 401k might have you in some conservative mutual funds or target date funds, and there's a bunch of bonds and all kinds of stuff in there. If you are behind, you need to harness the power of the stock market, and you should probably be investing more in something like an S&P 500 index fund than you would like a US Treasury or bond fund. The stock market has averaged about 10% returns over the last 100 years, and you're going to want to harness that growth versus something like a balanced mutual fund. Plus, index funds like the S&P 500 index fund, super low fees, so you're not going to get loaded down with fees either. So let's just run through this example. Let's say maybe you're not all in, but you're 90% in an S&P 500 index fund and 10% you're going to put in like a bond index fund, and you're going to average about 8% a year growth. If you just take some of those accounts, let's say you just do the employee side, you're going to put $23,000 in your account, $23,000 in your spouse's 401k account. That's $46,000. Then you both open IRAs and put $7,000 each in those. Together, you're investing about $60,000 a year. That's $60,000 a year at an 8% return. If you combine it with your $115,000, will get you to $1.99 million by the time you want to retire, by the time you hit age 65. Yes, that is an aggressive plan, but if you want to get to a comfortable retirement, you're going to need to put that amount of money away. So if you're age 50 and you're feeling behind, this is a realistic path toward a goal. And in fact, this would exceed a comfortable retirement goal of $1.25 million to get you closer to $2 million. Now, step four is just making this thing an actual reality. Once you run the numbers and you're like, I need to invest, maybe it's not $60,000, maybe it's $50,000 a year. Maybe you're putting 20 in each 401k and you're putting 5 in each IRA. But either way, you need to start putting that money away through automation. The best part is the 401k is automatic. You just elect that deduction in you talk to your HR department, say, hey, I want to make sure I'm putting away, $20,000 a year into each of these 401ks. Boom, it'll automatically come out of your paycheck and it lowers your taxable income. So your tax bill is going to be lower. With an IRA, let's say you open one at Vanguard, you're going to need to go in and set up a recurring transfer. They have a thing called an automatic investment in there. You go and you automate the investment and you put it into the same investments every single month. Without fail, you're going to put, $550 a month away into each of those and just ignore it. If you automate the process, it will just happen no matter what, and you live on what's left over. Now, that's really it. Just these two accounts, maxing these things out, are going to get you to a place where you can still retire with nearly $2 million, even if you're coming from behind. Now, if you need help with this, it's a good idea to reach out and get professional help if needed. I would avoid fee-based financial advisors. You could use something like a fee for service where they just charge you an hourly rate. This is something I would also do. I just break down people's financial situations and take a look at them and give them some pointers. So if you're interested in money coaching at all, I've got an application in the link below. You can just click that and apply, and we can have a chat, see if it's a good fit to start to put this plan together. But ultimately, you need to start executing. You're not going to magically just happen to roll into a $2 million retirement. You have to make the decisions. You've got to open the accounts. You've got to set up the investments. You've got to make the decisions, and then you got to automate the thing and let it happen in the background. And you got to live on a budget that allows you to actually put that amount of money away. It's a realistic possibility, but you have to make it happen. So listen, if you're feeling behind, even if you're the same as these median savings amounts, but you need a whole lot more to retire, you're not alone. Everybody's in this same situation together, but if you want to climb out of it and you want to actually get ahead and get to a comfortable retirement, you got to start taking action. Don't worry about feeling bad or not knowing enough or any of that stuff. Just get on a budget, put the money away, set up your investments, talk to your HR department, click the buttons that you need to click to start putting the money where it needs to go so it can grow to a comfortable retirement. And of course, if you need somebody to chat with about that, you can just click the link below and just hit apply and we can have a chat just to see if it's a good fit and if I can help you, come up with some direction on where your money should be going. Now, if you want a step-by-step financial plan that goes through this stuff, I actually have a 10-step investing roadmap of the most tax-advantaged way to put your money away and grow to a wealthy retirement. You can just click the link below, just roadmapmoney.com/roadmap. and I will send you my 10-step roadmap. And if you're trying to reverse engineer how much money you need to retire, I have an entire video here where I break down my step-by-step process to show you what you need to consider, how to budget for retirement, how to adjust for inflation, and how to back out any other income you have so you know exactly the number you need to save toward, and you don't end up over saving. You save just enough to be comfortable. Check it out right here.